So you shared with me ARK Invest Big Ideas 2021. We're going to get into some of the specifics of this futuristic presentation, I guess you could call it. But there's one idea that we wanted to get into because of the news today. So they put in this graph and they said if all S&P 500 companies were to allocate 1% of their cash to Bitcoin, ARK estimates that the price would increase by approximately $40,000.
You know, I almost tweeted this last week with the caption, and if a frog had wings, he wouldn't bump his ass when he hopped. Do you know what that's from? But I feel like nobody would have got that.
Now, is that a movie?
It's from Wayne's World.
Okay.
Cassandra says it.
Okay. I feel like you're the only person I know who still quotes Wayne's World.
It was Wayne's World was a big part of my childhood.
I saw, and yeah, it was on the Super Bowl too. But so they had this chart.
Oh, wait, hold on. Good point. When I saw that commercial, I was like, nobody knows who this is right now. If you're under the age of
probably not.
I don't know, 30, like you're like, wait, who are these old guys?
That's true. So they said like if corporations put 10% of their balance sheets in, it's worth $400,000 to Bitcoin or whatever. And
did you check the math on this?
I don't know what exactly how they're running the parallel here, but sure, whatever. So come to find out today, Tesla has announced that it has bought $1.5 billion worth of Bitcoin. Had to do a filing with the SEC on this. And this isn't a small piece of their corporate cash hoard. This is 10% of their cash, because I think that what's the other one that Michael Saylor does, MicroStrategy? Theirs is like 1% of cash. This is a big part of Tesla's cash. This is not a small part. So this had a big move. Bitcoin was up 15% today. This was a huge move. And it's kind of crazy to go back. Have you read the book on Musk before from that Ashley Vance guy? I mean, There were multiple times where this company was going to go under. And it could have, like, within weeks of basically going out of business. And now that he's the richest person in the world, I put this on Twitter today. I honestly think 20% of the stuff he does is just to troll people.
Yes, I agree. I'd say 40%, maybe 140%.
Maybe he thinks we really are living in a simulation, because he puts Bitcoin in his profile on Twitter a few weeks ago, and Bitcoin rises. And I said to you, isn't it wild that while Bitcoin is becoming more mainstream, something like this can happen and it still sees such a huge rise from just a piece of news like this? So I was thinking, are we seeing a handoff here? Like, I think you'd get a bigger reaction from Musk doing this. Like, let's say this would never happen. Buffett says we're putting 1% of our balance sheet from Berkshire Hathaway into Bitcoin. I honestly think the Musk news would have a bigger move on Bitcoin than Buffett at this point. Don't you think? Like, he's almost past him in terms of relevance in today's market.
Does he still have Bitcoin on his profile?
I think he took it down, but I mean, he's got kind of the golden touch these days. He did it that Signal Analytics stock that had nothing to do with what he tweeted. He's been talking about Dogecoin and Bitcoin and all this stuff, and it seems to move whenever he makes a pronouncement. The guy has like the golden touch these days, whether people want to admit it or not, I guess, or whether you like him or not.
So in December he tweeted, Bitcoin is almost as BS as fiat money.
Right. That's why you can never tell if he's really serious or trolling, or I can't tell half the time. I mean, back to the Cathie Wood ARK thing about this, putting on there. I mean, obviously, there's tons and tons of Fortune 500 companies that would never do this. But will a few other companies do this?
Yes.
Probably.
Yeah, no doubt.
It'll happen. Will some of them live to regret it? Potentially, if Bitcoin has another crash in the future. But
I'd love to know how this works, how long it takes to buy $1.5 billion worth of Bitcoin. I guess maybe we'll talk to Zach Prince about this next time he's on the show. But was this through BlockFi? Was it through Gemini or Coinbase? Or, I mean, certainly not through Robinhood, but where was the buying done?
I would like to hear that too, how that liquidity is possible. But I think he's just, at this point, having fun with everything. Do you think he ever really expected Tesla to get this big? Like in his heart of hearts?
To be the fifth biggest company in the market? Probably not.
And this fast? I'm sure he's saying, like, I'm playing with house money at this point. Let's just see what can happen. He's been tweeting about this Dogecoin thing, which this is the dumbest thing going on right now, right?
Yes,
this is the dumbest part of the bull market. This was a cryptocurrency that was created in 2013. And this guy, they had a story in the Wall Street Journal about it. He said it took him 3 hours to code, and he said it's just absurd. He did it as a joke. He put a dog on it, and people are buying this, and it's going up. It's got like a $10 billion market cap, or whatever you call it with these coins. This is so stupid.
There's probably a lot of dumb money in here, but I don't even know what, I guess dumb money has lost all meaning. But
Yes, it has.
What, but maybe there's also some decent money in here. Like, or I say decent, some not so small money. Where if you know that you're just playing the greater fool game, then why not? I mean, it's the greater fool has been probably the greatest investment strategy over the last decade.
We've essentially gotten to the place where it's not pump and dump anymore. It's pump and hold. People like pumping and holding stuff. And it's, but this one is just, I mean, so much of the crypto stuff has gotten into more mainstream and it makes so much more sense. This part's dumb. Like,
this part is dumb.
Anyway.
By the way, being specific, this part meaning the Dogecoin.
Yes.
Not necessarily. So Tesla's also going to start accepting Bitcoin as payment. Not that anybody's going to buy Bitcoin, Tesla with the Bitcoin, you would think.
It's interesting, though, when people talk about institutional adoption of this back in the day, it was more like foundations and endowments and pensions and sovereign wealth funds. I don't think people ever thought about corporations holding this on their balance sheet. I think this is something new that people didn't really talk about before.
What's your price target?
I guess whatever ARK says it's going to be worth. We'll go with that.
The only Musk book that I read was the story about Blue Origin and SpaceX. Do you know the name of that book?
No, I never read that one.
Okay, that was pretty good. Anyway, I was trying to tee you up, Ben, for the pivot, for the segue.
Okay, so that's what Bezos is going to do. Bezos? Did I say it wrong again? I don't care. Screw you for getting that in my head. So he retired.
You know, last week you called Jared Leto. I wasn't going to say anything, but since you bring it up,
okay, come on.
What? It's Leto.
Whatever. I don't care. All right, before we get into Bezos retiring, what that means, I wanted to read this because this is from the Everything Store by Brad Stone. Did you read that one?
Nope.
We're doing a lot of book drops here. This anecdote always stuck with me. In early 1997, Jeff Bezos flew to Boston to give a presentation at the Harvard Business School. He spoke to a class taking a course called Managing the Marketplace, and afterwards the graduate students pretended he wasn't there while they just dissected the online retailer's prospects. At the end of the hour, they reached a consensus. Amazon was unlikely to survive the wave of established retailers moving online. Quote, "You seem like a really nice guy, so don't take this the wrong way, but you really need to sell to Barnes & Nobles and get out now," one student bluntly informed Bezos. I just love that. I mean...
Wait, you know who that student was? Cameron Winklevoss.
Probably. I mean, whatever. Take that however you want it in terms of learning a lesson, but...
You can't always be right.
But, I mean, his timing here, before Amazon potentially splits up and spins out AWS, I think him leaving now, this is perfect, right? And he's still going to have an imprint on the company.
Oh, yeah. Well, let me ask this. Who's more wrong? The person who doubted Bezos in 97 or the person who sold Amazon short in 2011?
That's true. That's fair. They're already established by that point.
So Bezos announced his retirement. I don't know if the retirement is the right word, but he's transitioning. Let's just say that. He's transitioning roles. Amazon just did $100 billion, I should say, $100 billion in revenue in the most recent quarterly report. First time they ever hit that number.
I mean, he goes on the Mount Rushmore of CEOs and founders of all time, right? And it's not even a question?
Well, I think I'm just going to say what everybody's probably thinking. Are we sure he's not overrated?
Someone had to say it, right? Yeah. What has he ever done?
The profits more than doubled from a year earlier to $7 billion. Here's some AWS numbers. $45 billion in sales last year. So Andy Jassy, the new CEO, has been with Amazon since the beginning. He was the head of AWS. Man, $45 billion in sales. They're still growing at 30%, up 30% from a year earlier.
Right. Why didn't those students at Harvard realize in 97 they were going to create a cloud computing arm that would...
They just completely missed that.
How could they not see that?
So do you agree with the statement? Amazon has disrupted fundamental analysis more so than any company of all time, with the exception maybe of Tesla.
No, I think Amazon... Because I think Amazon laid the path for all these other companies now. It's given investors... free reign to view some of these companies and pull forward things more than they ever would have done in the past because they point to Amazon and say, look, it worked.
Right. I totally agree.
We let them do this. And I think back to the Buffett thing. Let's say he's in his 40s right now. And do you think he would have been able to invest in this type of environment and look past and say, well, Amazon and Apple and some of these companies have the moat, so I'm going to invest in them?
Ooh, if Buffett was 40 years old today?
Yeah, if he's investing in this environment, would he have been able to get rid of some of the Ben Graham stuff and go more with the Munger and say, all right, I'm going to invest in the moats and I'm going to try to invest in Facebook and Amazon and Apple and these bigger quality companies?
I think he'd be a meme stock guy. Impossible to say. This is pretty gross as a tangent. We got news last week. I think this sort of got swept under the rug. Amazon agreed to pay $62 million to the FTC to settle charges that it withheld tips to delivery drivers between 2016 and 2019. I mean, are you kidding me?
How is that? Oof, that's gross. Yeah, I agree.
I mean,
mean,
did they pay, but they didn't admit wrongdoing? Was it one of those?
Must have been. How do you withhold tips from drivers? I don't know how that works, but I mean, is it possible to have a company this big these days and not be a jerk sometimes? I feel like all of these people have that in them where they're just a huge jerk in some ways.
We've spoken about this before. I don't think you could get to the top without stepping on faces and being ruthless.
So in that Everything Store book, they said the thing you never wanted to get an email from him is just a question mark. So anytime he was reading early in the days of Amazon, Bezos was reading like customer support emails when something would go wrong. And when it would go wrong, he would forward the email to someone and all it would have is a question mark. And that was when people were like, oh, he's pissed. Do not, like, if he just sent you a question mark and that would be like, fix it now, that was what you did not want to hear. But yeah, it's he had some stories where he just probably not a great guy to work for in a lot of ways. It's a hard time squaring that sometimes with being so successful, but also being someone you probably wouldn't want to work for in most instances.
So Apple last week, or maybe 2 weeks ago, also eclipsed $100 billion in a single quarter. According to Axios, the only other companies that have ever done that are Walmart and Exxon in the early 2000s. I kind of thought Walmart was doing $500 billion right now, but maybe I'm wrong. Either way, that's impressive. So that leads me to this other thing that Axios did. They threw up a chart of Amazon, Apple, Facebook, and Apple. Where's Microsoft? Either way.
You said Apple twice.
Okay. Apple, Alphabet, Facebook, and Amazon.
Okay.
I'm sorry.
I prefer Google.
So do I.
All right.
But I'm just reading from the sheet. The growth in profits is ridiculous. I mean, absolutely ridiculous. And I thought about this. So Meb Faber did a thread which we'll link to. Below is a list of my favorite charts demonstrating the U.S. stock market is bubbly, bubbly, bubbly. And so there's a lot of good charts in here that we will certainly link to in the show notes. But I was thinking, as I'm looking at this chart, isn't this chart alone, if you had to push back for why the market is not in a bubble, to me, this is the single chart I would use, I think.
These huge companies, yeah.
If you do not have an outright, and I'm stealing from Howard and Andrew Marks, if you do not have a bearish thesis for these companies, which are continuing to grow, as I said, AWS is doing 30%. If you don't have a bearish view on these giant tech companies, it's hard to be bearish and or say that the U.S. stock market is in a bubble, because these are now 23% of the market and they're growing like gangbusters still.
Yeah, if you had Tesla now, you're talking 6 companies that make up 30% of the market. You're essentially saying either those.
Wait, is it that big? No,
pretty close. No, well, I guess Tesla's more 2%. You're right. So it's probably 25, 26.
Yeah, but still, that's one quarter of the market.
So yeah, you're effectively saying to bring the whole market down. You're saying these companies have to come down, or the other 75% are all going to crash, and those ones are doing really well lately.
But if you look at the market X these names, I mean, listen. Nobody is saying the market is cheap. I don't think anybody's saying that. I also don't think anybody would say that there's not some crazy shit happening, right? Like we've been discussing this for years now. But I don't think that you could just look at traditional fundamental analysis, the way that Amazon disrupted it. I don't think you could just use median price to sales or whatever we used to rely on and just using that alone to say the market is in a bubble. I don't think that's right.
Market cap to GDP or Tobin's Q is not going to save you right now. Trying to do median PE ratio stuff, especially because, like you said.
And by the way, if this is a bubble and it pops, then I missed it, right? Like I don't think this is a bubble.
Yeah, I agree. I think we've talked about micro bubbles. You're going to have micro crashes, I think. I think that's the way that these things are going to happen, and that's going to be harder for people to realize. Because I think you're going to have so many of these regime shifts where people jump from sector to sector, place to place.
All right, let's move on to market participants.
So this is sad yet predictable. Here's some survey data. Among Democrats and millennials, about 7 in 10 believe the stock market is rigged against amateur investors.
Wait, Democrats and millennials?
Yes, for some reason.
Oh, okay.
It's a progressive thing. Compared to about 3 in 5 Republicans and baby boomers who said the same.
Let me ask you a question. What's going on with the 7 and 10 and 3 and 5? Because if you just normalize that,
That's
it's
true.
pretty much the same thing.
3.5 and 5.
They're trying to fool you with denominator nonsense. Listen, let's just normalize that. 7 in 10 Democrats and millennials believe the stock market is rigged, and 6 in 10 Republicans and baby boomers say it. So look, we're all in this together. We all think the market's rigged. Baby boomers, Republicans, millennials, and Democrats, we all say it's rigged.
Yes. So they're basically saying there's a big swath of the population. And of course, they did this after the GameStop stuff that think it's rigged against them. They also asked some Robinhood stuff. It's kind of interesting. We talked about this last week, but they're asking who expects to change their usage of Robinhood coming up. And some people said, I will use Robinhood less going forward. It was a small number. It was like in the 8 to 15% range, depending on who you ask. In adults,
how about this? An honest survey for once.
I think it was honest, actually. Yeah. Besides the rig, it's too bad people think it's rigged, and you wonder how much overlap there is with people who think it's rigged and people who are not participating in it.
Wait, hold on. So let's just break that down one more time. For people that think the stock market is rigged, but will use Robinhood less going forward, I mean, that's really special, right?
That's true.
Again, people who think the market is rigged and will use Robinhood less going forward, that's only 8%. So if you think the market is rigged, there's only an 8% chance that you will use Robinhood less going forward. So what does that say? I think the market is rigged, but F it, I'm still going hard.
Well, there's actually 13% of people say, I agree the stock market is rigged, but I will use Robinhood more going forward.
To get ahead.
So they're using the riggedness to their advantage. I don't know. My whole point has just been, I think the stock market is one of the craziest places where you can play in the same playing field as them. You're on the same court as LeBron. But if you have patience and wait a little longer, you actually have an advantage because you don't have to look at your Sharpe ratio or your Sortino ratio over a 3-week period like the professionals do. I feel like there's so many advantages. The problem is we've said listen, index funds basically cost nothing now. It costs nothing to trade. If you want to have a frictionless investing environment, you can do it really easily these days. And everyone has said, nope, here Wall Street, take our crazy ass options and volatility trades and make as much money off you as you want them.
So you can get market returns, pay very little, and do nothing. And by virtue of doing that, beat most of the professionals who try and beat the market.
Yes.
But by just getting market returns, you're not going to beat the market, obviously.
Yeah, and you don't get to own meme stocks very much.
Right.
So,
although Tesla's 3% of the S&P 500?
That's true. And if you've been in a total market fund, you've been in Tesla since 2010.
So wait a minute. If Tesla's 3% of the S&P 500 and they've got 10% of their cash position in Bitcoin, if you own the S&P 500, you have 0.000064% of your portfolio in Bitcoin. So did you just get off zero if you're an S&P 500 investor?
It's sad to say I actually calculated that today, what the amount is.
Okay, hit us.
It's 0.0004 or something. I was going to tweet it. And I thought, you know what? I'm staying out of this. But yeah, so you technically own Bitcoin now if you own an S&P 500 index fund or a total stock market fund.
To the moon, Ben. This was the most bullish presentation, maybe I've ever seen. In every futuristic area, she's showing 45% CAGRs. She is thinking big.
What I said to you is, offline is, it's funny to me that she's been right for a long time, call it 10 years about this stuff. And most of the stuff she's gotten right. And for a lot of people, it would be harder to get behind her optimistic view of the future than it would be someone who's been a pessimist for 10 years and been completely wrong. Mm-hmm. Because of the way our brains are wired. It's way easier to go with the bearish person like Grantham, who's been wrong for years and years about a market bubble and be pessimistic than it is to go with someone who's optimistic like her and been right.
Yeah, because she looks naive. Optimists look naive of all the risks. But I think this is, this is sort of one of the reasons why people sort of scoff at some of their work. According to ARC's research, deep learning will add $30 trillion to the global equity market cap over the next 15 to 20 years. Okay, that's deep learning alone. And keep in mind, that's basically double what the US stock market is worth today.
Yes.
So that's pretty ambitious.
That's a lot of money.
All of her charts sort of go like this, just ridiculous growth. So here's another one. ARC's research suggests that autonomous ride-hailing platforms will generate more than $1 trillion in profits per year by 2030. I don't know what the total income is from The S&P 500? Well, let's see. If the US market is, call it 35 trillion and is trading at a PE of what? In the 20s? All right, so let's say that it's between $1 and $2 trillion, roughly. They're suggesting that ride-hailing platforms will generate more than $1 trillion in profits by 2030. I'm going to say 20 never. Not to be too much of a bear, but by 2030, that is extremely aggressive, no?
Yes, this is what they do. It's all exponential stuff for them.
So global electric vehicle sales from 2020 to 2025, it basically goes from nothing to up to the sky. She's predicting an 82% CAGR, 82% between 2020 and 2025 for global electric vehicle sales.
I mean, if they would have stretched this one out to 2030, that one might be a little more reasonable, because GM said recently they're going to, by 2035, have full electric fleet, right? So maybe they're just a little early. I'm not trying to say that they're right, but all they have to do is be right on like one or two of these things, and they're gonna probably do okay, right?
I don't know.
All right.
Global food delivery. They're projecting $18 billion in 2025 and $116 billion in 2030. By the way, I think Grubhub reported earnings, and I didn't get a chance to look at it, but I don't think it was very good, which is
so maybe this is the one that really doesn't make sense to me, the food delivery stuff. Maybe it's just it's again a play on like rich people having too much money and just paying for convenience. But I don't see this as like solving a huge problem for that many people. Do you?
I don't mind either getting delivery or just picking up. But so here's what I do mind. I got a DoorDash coupon for $50. That's not relevant, but whatever. So I got dinner. I spent $45 on dinner for myself and Robin. $45 turned into $70.
What, with all their fees and such?
With all their fees, and they're still not making money.
Yeah. This, to me...
Dude, 45 into 70, it's absurd. I will never use that service.
We could look like idiots on this one, and maybe we just don't see it all. But this is one that I just don't see the problem they're solving here.
Well, here's the other thing that I was thinking about. We're not venture capitalists, right? So you see a lot of like ridiculous things on Twitter, but they're privy to a lot of the futuristic stuff that's being built. We don't see that.
Yeah.
That's not an hour workflow. I have no idea what's going on.
I guess maybe the other thought is it's not just food. We're going to deliver everything to you. Anything you need, anytime. We're going to have these fleet of autonomous vehicles driving around, and it's just going to be at your door like on demand. I guess maybe that's the dream.